You are listening to chartingwealth.com for Friday, the 8th of June, 2018. Thank you to everyone who has purchased our book, Charting Your Way to Wealth. You want to sponsor us here on the channel and help us continue to put out all the quality things that we do for free. Buy our book. It is a boiled down of everything you need to know to start understanding these charts, how to chart the market, how to get into trades and investments and get out. Again, we want you to practice, 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 and one way to start learning how to do that the right way is to have our book. And it is available. Look at the top right-hand side of the screen. There is a link, and if you press that, it will take you to a video. And in the notes of that video is a link to our page where you can purchase it. You can also find the links under our daily market reviews at chartingwealth.com, the website, and also at our YouTube channel and in the emails that we send out to all of our subscribers. How do you become a subscriber? You go to chartingwealth.com and sign up for free. We'll send you these daily market reviews. The weekly comprehensive review and forecast we'll do at the close of the market tomorrow, well, on Friday, depending when you're listening to this. Some people listen to it late on Thursday, others on Friday morning, but we always do our comprehensive review and forecast for the weekend, and that is coming up. So subscribe so you get everything. Again, thank you so much for your support. Let's jump into the market. Exactly the opposite of what we saw yesterday. Stocks are down, gold is down, and bonds are up. Let's first go to the S&P 500. We're going into a week of up movement after the weekly vertical crossover on the prior week. Green open box candle, nice big green candle so far. We'll finish drawing that candle at the close of the market on Friday. Third week of the derivative oscillator moving up, price percent oscillator also moving up. We look at the 2-day chart. We can see that it's spiked up. It's now finished drawing. This latest 2-day candle is complete. And of course, price movement is well above the 2-day trend line. Derivative oscillator gaining energy. That's looking great. Let's take a look at the 4-hour chart, see what we see. We have a red spinning top. It's a red open box. Again, doesn't mean as much strong down movement as a closed red box means. It's got movement on the top and the bottom, not just movement on the bottom. So it means indecision, tending down. Price movement is all contained within the prior green candle in the morning. So it's a bit of a pullback in the afternoon. Pay attention to that. Derivative oscillator still heading up. Price percent oscillators has lost a little bit of its upward movement. So watch things. Those of you who jumped in and have ridden the S&P up nicely, don't lose what you've made over the course of the last week in your virtual trade. So again, watch things, pay close attention. If it does look like it starts falling and is crossing over, going down on that 4-hour chart, take your profit and wait to play another day. But again, this is where you train. This is how you start learning how each of these individual ETFs, it's the same with stocks, they all have their own personalities. That's why we urge you to practice every single day. You fill out that daily market worksheet. That every day at the close of the market, you fill out the weekly market worksheet once a week, and you fill out the trade worksheets when you're doing your practice trades, okay? Please make sure you do that. That will supercharge your learning and make you a market master so much quicker. You will become an expert chartist. If you're interested in this method, please, please do that. It is the only way to really understand what we do. And remember, this is the toughest, hardest time of year to trade. It's what we call the fall-winter trading zone. I'm sorry, it's the summertime trading zone. Fall-winter trading zone is the best time to trade, and we'll be entering that in the fall. But in the meantime, we're going to practice, practice, practice. That's how you get to Carnegie Hall, practice. And perfect practice makes perfect. That's what we're going to try to do. And we're going to keep moving forward. Now, that's what's going on the S&P 500. What's happening on the Qs, the NASDAQ 100, the tech stocks have a nice big green up candle for the week. Derivative oscillator gaining momentum, price percent oscillator heading up. 2 weeks ago, back on the 25th of May, is when we had, for the week ending then, is when we had our weekly vertical crossover. We've had nice appreciation in price movement since then. Derivative oscillators gaining energy, price percent oscillators heading up. Nice big fat candle. 2-day charts are looking sweet. 3 up candles. Derivative oscillator gaining momentum, price percent oscillator still heading up, not quite at the same steep angle it had been before, but still heading up. Now let's hone into that 4-hour chart. Pay attention to this. We had indecision in the morning and then down movement in the afternoon. The S&P 500 was almost even at 0.01%. However, the Qs, tech stocks, down 0.81%. So you've done very, very well over the last 2 weeks. Be very cognizant of a crossover going down. Price movement still well above the 2-day trend line. But if you have that crossover on the chart, if you hadn't already taken your profits when you saw this happening in the afternoon, pay close attention on Friday. Market could bump up again. It might bump off the red signal line, but if it crosses over going down, and the derivative oscillator can sometimes be a forerunner to that happening. And again, this is one reason it's important to backtrack and to pay attention to what you see happening and how the market has been reacting and how much of a precursor of a forewarning is a drop-off in the derivative oscillator on the particular ETF that you're trading on and the particular time of year. So pay attention to all those telltale signs. Keep an eye. Things bump up in the morning, then you may stay in the Qs. If they start really continuing to move down, take your profit and be thankful for a nice fat chunk of up movement and be done. Don't worry about losing a little bit at the end as long as you keep the big chunk in the middle. Do not get greedy. Greed will kill you. Hogs get slaughtered. Okay, that's where we are on the Qs. Keep moving through things. Good to see how well the S&P and the Qs have done with us with those weekly vertical crossovers. What do we see going on with that weekly vertical crossover back on the 25th on TLT? Well, we've been talking about the problems with that. We had 1 week of up movement, and so far over the course of the current week, derivative oscillators gaining momentum. Price percent oscillator is moving up, not too strongly, but we have a red spinning top, means indecision tending down, penetrated, of course, throughout the course of the week. Beginning of the week, it penetrated immediately the 2-day trend line there on the weekly chart. As we look at the 2-day chart, of course, we've now gone into our second red down candle, means lots of strong down movement. However, derivative oscillator hasn't lost that much energy, but has lost energy. Price percent oscillator is still heading up. Now, don't forget you had 6 days, 3 candles of really strong, powerful up movement, and then a little bit of a petering off there for the 2-day candle on the Friday the 1st of June. And so far, the first 4 days down movement of this current week. So again, lots of downward pressure after all that strong up movement. What do we see on the 4-hour chart? Of course, it's been cutting back and going down since we brought this up on Monday. In fact, we saw it originally peak out and start down on Thursday of the prior week, the 31st of May. Strong down movement in the morning on Friday. It peaked out on Thursday. And strong down movement on the first day of June on Friday, and continued to go down. What we've seen happen over the course of the last day is some up movement that really kicked in. We've seen the derivative oscillator stop heading down, actually losing down momentum. Price percent oscillator heading up. So again, keep your eye on things. If things, as we talked about yesterday, do cross over on the 4-hour chart going up, might be a good possibility for you to look at jumping in to a movement going up on TLT. But don't have it right now. But again, keep your eye on things. If both the 2-day and the weekly continue in up movement, you darn sure can get in and ride that wave. Okay, what's going on gold? Gold has been going down actually for quite a while. We look at the weekly chart. We have several weeks of movement below the weekly trend line. We have that happening over the course of this week. Also, price movement red down candle, little bit of a wick on top, a wick actually wider than the candle itself on the bottom. Derivative oscillator heading down, price percent oscillator heading down. So again, we have downward weight on gold, gold down for the day 0.05%. We look at the 2-day chart. It, of course, has been sliding sideways since it really bottomed out at 122.32, so it's still in a confirmed down move, not a strong one. Derivative oscillator actually on this last 2-day candles popped over going up. We have a green spinning top, which means indecision, tending down, almost a doji. Price percent oscillator is heading up. Now let's look at that 4-hour chart, and what do we see? We see for the last day and a half, it's been sliding sideways also. If it does cross over going down, then of course you can look to hop into a down move, but we've already sort of had a false one. But if it flags and starts moving down again and crosses over, practice trade an inverse on gold and see if it's going to work this time, unless something's telling you not to do that. Do keep an eye on the 2-day chart, but that weekly chart, all things being equal, the market does tend to move in the direction of the largest chart, and that largest chart is still down. So that's where the weight of the market is down when it comes to gold. So keep your eye on this 4-hour chart. Might give you another opportunity in the next day or two to jump into a down move. Like we said, down 0.05% for the day on Thursday. God bless you, my friends. All the best from the whole team here at Charting Wealth World Headquarters. Buy our book. Take care.